So Joshua Kim,
Yes.
7accelerator.com. We're talking about SBA loans. This is an exclusive conversation from the ROI Online Podcast. So, what I'm curious about is, can I buy a business with an SBA loan?
Yes. The answer is very much emphatically a yes. It's actually funny. I have lenders that I know who that's all they do. Like there are some SBA lenders out there, they are exclusively M&A shops. So, they work with, primarily they work with business brokers to, send them referrals and whatnot, but there are some lenders that's exclusively what they do. And the reason for it, it's very simple. When you start a business, you have a lot of hurdles to get over. You have to establish product market fit, whether it's for goods or services. You have to find your first customers. You have to bootstrap a lot of it. You have to, hire staff. You have to do all these things. And when you buy a business, a lot of that is already figured out. The wheel is already spinning. And that's what I kind of realized when I bought my first business. I said, well, I don't want to have to go start something from scratch. Like that's not really, my expertise. I don't want to have to go, spend years, getting from 0 to 100 grand of revenue. Like I just don't want to do that. And so what I realized was a lot quicker. I said, well, what if I just buy a business already there? It's already making money, and just basically do a leverage buyout on a small business. So the reason lenders like business acquisitions is because there's a lot less risk. If you have someone who's qualified and knows how to run that kind of business, the business already makes money. If the business makes enough money to pay off the loan monthly, it's a good deal for them. Mm-hmm. It's a great option. So generally speaking, as long as the business purchase is at a number where the total amount of money you need to borrow from the bank is less than 3 times the net earnings, you're good. So in the case of my first business, it was actually the total debt to earnings was about 2. So the business made about $600,000 a year, and the amount of money that we borrowed to buy the business was 1.2 million. So it was a very easy math equation for the lenders, because they were like, okay, well, you have $50,000 a month in profit, and your bank loan came out to about, 14,000. So there's plenty of margin there for reinvesting in the business, having positive cash flow, as well as obviously to cover the bank loan. So that's what I would say. For people, it's actually far easier to get one to purchase a business than to start a business, as backwards as that sounds. And so, with the courses, with the course that I have on SBA loans and some of the content that we're putting out there online, we'll definitely get more into that over time, because I think that it's definitely a misunderstood area, and not a lot of people think about that as an option, instead of starting, like, oh, I got to start a business. Well, why not take your 50 grand of savings and just go buy one? You can go buy a business that is making 250, 300 grand a year for $500,000-$600,000. You put down your 50K and you've made it back in 5-6 months. So it's a much simpler business model, I think, to me. But yeah, you definitely can.
There's a book that argues that point really well. It's called Buy, Don't Build, I believe is the name of that. I forget who the author is, but it really helped me understand the significant risk that businesses are facing when you start a business. It's like 1 out of 40 businesses will ever. So 1 out of 40, it's 1 out of 400 that will ever make $1 million in revenue. And so you think about the odds of just staying in business, and then the gauntlet you have to run if you make it. You're in business for 8 years, but then you have, what do you have to show for after this long fight? And to actually buy a business will help you shortcut a lot of traps and ditches that you have to navigate if you're starting a business.
Yep. Yeah, I actually looked up the book. I forgot who wrote it, but I had heard of it. I haven't read it. Walker DeBell, and the title on it is How Acquisition Entrepreneurs Outsmart the Startup Game. Mm-hmm. And it's really the case. There are a couple of people out there who do some education. They teach a little bit about kind of the acquisition business model. But the crazy thing about it is there's plenty of people out there on a day-to-day basis. That's all they do. They purchase this. I know people who they've purchased. They purchase and they have 14 different companies. They're doing over $100 million in sales. And, as far as, I'm not going to say it's a shortcut to building wealth, but it is. If you're able to buy a business that is already making 600 grand a year, I mean, how many other 19-year-olds would, are in a position where they have a business that's profitable and is doing $3 million a year in sales? Like that was my position at 19, but that's because I figured out why not just buy something versus starting it. I mean, start something, like you said, the chances of getting to, $1 million plus in revenue are only one out of so many. And, a lot of businesses, they fail because they're trying to offer a product or service that just nobody wants, or they're offering it at a price just that, doesn't work. So go figure out what's already working and you've solved half the battle, and that's the whole premise of people on why they buy businesses. But yeah, I mean, if you talk to business brokers, people are always buying, people are buying and selling businesses all the time. But not a lot of people hear about it because it's not as sexy as, hey, I want to go start a tech startup or a software online company and this and that. And it's like, okay, well, forget sexy. What, we'll buy, what buys a lake house? Money.
Mhm.
And so, yeah, that's why I think the acquisition model is definitely superior. So I do have content that goes into that with kind of like our resources and kind of like my course. But yeah, it's a much easier business model.
So quickly, what are the top 3 myths that surround SBA financing?
I think the biggest one is kind of what we touched on. It's kind of a bit of a 2-in-1. It's that, not all lenders are created equal, and SBA financing is getting hard. Getting SBA financing is hard. A lot of people think SBA financing is hard, but it's because they're talking to the wrong banks. So they're kind of an interwoven, reason there as to why people have issues doing it. And we touched on that a bit before. I think some of the other ones are that you need a lot of cash or you need a lot of collateral. That's the biggest one I hear from people. And a lot of times that's because they go talk to, they go talk to a big bank, and the big bank's like, well, you need $1 million for your business. That $1 million that we would give you would be 75% government guaranteed, but we want to see $1 million of equity and cash between your house and your personal other finances. It doesn't make any sense at all. I mean, the whole point of the SBA loan program is to be able to provide loans for people who don't have full collateral coverage for something like that. And it actually says explicitly in the SBA's SOP, a lender should not decline a loan solely on the basis of lack of collateral. If it has cash flow, if it has managerial experience, and the borrower is otherwise creditworthy, you can't decline a loan because there's a shortfall in collateral. And so that's one of the big things that people really miss out on. Wife just took a shower, but that's one of the big things that people just totally eclipse over is that they just don't think about that because they talk to the wrong bank. I think as far as what's the other third big myth? You need a ton of cash or collateral. That's a good one. What's another big myth?
I guess you have to be big and successful already.
Yeah, it's just there's so many just general misconceptions. Yeah,
I've got a PPP loan and I've got another credit line with a bank, and I'm going to get declined because that's a lot of potential debt.
Yeah. So I mean, issues like that. Well, the thing is, that's one of the tricky things with PPP. It's a loan until it's not, right?
Mm-hmm.
Until it's forgiven, they have to underwrite it as if it's not going to get forgiven. So that kind of can screw you up to some degree. But I mean, as long as it's in process of getting forgiven, it's not a big issue. But yeah, I mean, I think the other big misconception I hear is that it takes a long time and it takes a lot of paperwork to close an SBA loan. I have a friend of mine. I'm helping him actually get he's getting a large SBA financing to do a partner buyout. The total financing amount is actually $8 million. So 5 of it's coming from SBA, 3 of it's coming from conventional. And he recently just bought before getting the SBA loan, he actually recently just bought a house for, I don't know, like $1.5 million or something. And he told me the amount of work that he put in for the mortgage was like 10 times that of the loan application, the paperwork for the bank for the business loan.
Yeah.
And so, that's one of the things that I think a lot of people have misconceptions about as well, is that it takes a lot of work. And, how long does it take to close an SBA loan on average? Probably like 45 to 60 days. The reason that it usually takes longer though is it's usually on the borrower. it's the bank's goal is to turn an approval around within, 3-4 weeks max. If you give them a full application, they should be able to get all the questions back answered and approved within 3 weeks. But the reason that closings take time is usually it's the borrower doesn't have their ducks in a row. They're missing a tax return, they're missing a lease, it takes them too long to go fix their insurance things for the business, whatever the case might be. So that's what I would also say for people. Like, that's another big misconception I think should continually be broken. It doesn't take a long time to do it. It doesn't take a lot of paperwork. Just make sure you have a good lawyer and a good accountant helping you get it all done. It can get done pretty quickly. So.
All right. You've been listening or watching Joshua Kim. His company is 7thaccelerator.com. He helps folks navigate the SBA loan world. So be sure to reach out to him at 7thaccelerator.com and check out his course. Joshua, thanks again for being an excellent guest on the ROI Online Podcast.
Yeah, great being here. Thanks so much for it, Steve.
All right. And that's a wrap.